Okay, welcome everyone. Those that were with us at the start, those that have just joined us, we appreciate you being with us here today. We are here to talk about those darn DPAs. Okay, we love them. We love them so much. We're going to be looking at five of the biggest obstacles that we hear when it comes to transactions involving down payment assistance. We want to help identify and address some of the common misperceptions, objections, and perceived obstacles that are currently attributed to down payment assistance programs. The goal of this webinar is to help everybody overcome any apprehension about working with down payment assistance programs. So we're going to have some fun. We're maybe going to ruffle some feathers. But with all that, let's get started. My name's Will Medina from our DPR team. We also have with us today Melinda Harris, our Director of Marketing and Communication, Tracy McIntosh, our Customer Success Manager, Lori Johnson, our Customer Success Specialist, and Keith Futrell, our DPA Program Specialist. They will be answering questions in the background, so we ask that you please place your questions in the Zoom Q&A feature and engage with them as we go. We find that it's a lot easier to track those questions and answer them within that Q&A feature, but we'll also be taking a look at the chat as well. And before we get started, just a quick note that today's recording of the webinar will be shared with everyone. So today, we're going to start with a brief overview of the state of down payment assistance programs. We're going to dive into the perceptions and misperceptions about DPAs, specifically as mentioned earlier, by looking at the five most common obstacles or objections that we hear about working with DPAs. We're going to address those head on with feedback from your industry peers. We're talking real estate agents and loan officers from across the country that themselves do a lot of DPA business and have helped identify best practices to cut through the clutter and clarify timelines. We will also be providing some tools that you can pair with those best practices. But first, a little about who we are. We are a national database and matching engine of all of the more than 2,400 homebuyer assistance programs across the country. Our team has decades of experience in residential mortgage finance and real estate. We have been doing this for over 16 years. We've also created tools for mortgage lenders, real estate agents, and MLSs that enhance the experience and workflow when working with DPAs. Ultimately, we're here to help you connect home buyers to the down payment help that they need. So I'd like to start with a quick overview of the state of homebuyer assistance programs. We publish a quarterly report called the Homeownership Program Index Report, where we take stock of what's available across the country and look at developing trends. Now, while looking at the infographic, of all the homebuyer programs out there, 73% are some sort of down payment or closing costs assistance. Of those, 82% have deferred payments, meaning you don't have a monthly payment on the DPA loan for some period of time. 53% are forgivable, either in part or in full, essentially becoming a grant over time. And 51% are both deferred and forgivable. And then there are still other DPAs that are true grants at closing or are repayable monthly after closing. We have another webinar called DPA 101, where we explore this further, as well as dive into different program types, such as the Affordable First Mortgage, tax credits, or mortgage credit certificates. The goal of DPA 101 is to show how these programs are alike, how they are different, and what are their qualifying criteria. So we always get asked, who offers these programs? Well, every state has a housing finance agency. There are local housing finance agencies in certain markets across the country as well. City and county governments often have community or economic development departments or housing authorities. Many employers, like municipal governments, hospitals, and universities, may offer their employees some form of down payment assistance. Local housing authorities and CDFIs increase local DPA options as well, and the Federal Home Loan Bank network operates across the country through their member banks. A number of nonprofits like NeighborWorks and Neighborhood Housing Services and others operate in markets across the country as well with varying programs. There are also community action agencies, community land trusts, and so many other organizations out there all trying to open new doors to homeownership and promote housing growth and responsibility in your market. And they all have funded, available down payment assistance programs. So now that we know who offers these programs, where are these programs available? Well, they're available everywhere. High cost markets, low cost markets, urban, rural. Every state has a housing finance agency, as mentioned, whose programs are available statewide, plus all the local programs in each market. And here you can see the states with the greatest number of programs. But there is literally no county in the country where some form of help isn't available. So let's talk about some of the trends we're seeing with down payment assistance programs, and then we'll get into rethinking our perceptions in just a moment. We know that demand for DPAs is through the roof. Providers are increasing assistance amounts, income limits, and purchase price limits to help more buyers in today's market. As an example, home purchase price limits, I believe effective September 1st, just changed as well. DPA providers are expanding eligible uses of their funds as well as the inventory options available. There are new state and local programs that continue to launch in markets across the country, and 82% of all DPAs are funded and available. So there's so much more attention on affordability and down payment assistance now than in many years. These programs are still available and are not going away. Here we have a final breakdown of our Q2 2024 Homeownership Program Index report. Again, the Homeownership Program Index report, which we publish quarterly, offers a snapshot of trends. And over the past few years, it has shown a net increase in the number of programs hitting markets across the country. On top of that, it's also shown that 40% of programs continue to have no first-time homebuyer requirement. 37% allow for the purchase of a manufactured home. 30% allow multifamily residential properties, 2 to 4 units, of course, with the caveat that they must be owner-occupied. 26% are statewide, referencing state housing finance agency programs as an example. But most of the rest are you would consider local. And about 400 programs offer extra incentives for military service and various professions. So now let's talk about down payment assistance. These are some of the common things we hear, especially from the lender perspective, but we'll be considering both lenders and real estate agents as we go. We hear that down payment assistance programs add costs. There's no perceived margin, so that makes them unprofitable to originate. That DPAs add a layer of post-closing complexity and risk. From the lender's perspective, we would be looking at getting loans off of the books, sold and off to a servicer. That DPA training is hard to implement. There are adoption questions. Are loan officers going to originate these? Will closing timelines be delayed because of the use of a down payment assistance program? And most importantly, will the program run out of money after I start the loan application? In the end, taking all of this into account, we are essentially hearing from many in real estate and finance that we love the concept of DPA, but we struggle with the logistics and the economics of these programs. So with that in mind, we are here today to help combat some of these perceptions. We're here to essentially rethink our approach to and understanding of DPAs. And in fact, we're going to give you millions of reasons to rethink DPAs. But first, I want us to outline the 5 most common objections or misperceptions we hear about DPAs. We're going to acknowledge and discuss what the issue is, whether real or perceived. Then we're going to talk through solutions to these issues and or debunk some of them. So first up is inventory. We know inventory remains tight in most of your markets. This is real. But there are creative things we can do to help uncover more inventory options. Second, confusion about down payment requirements. Too many aspiring homebuyers still believe they need 20% down and don't know about low down payment mortgage options or down payment assistance programs, thus giving up on the idea of homeownership. We'll certainly delve into that issue. Another issue is we know over the past few years, many sellers, or more likely the listing agents representing them, have been apprehensive about accepting contract offers from buyers using down payment assistance. We're going to talk through the issue, then how to address it and deal with that kind of misguided apprehension. Another concern, of course, that's been around for many years is the misperception that all DPAs inherently extend, prolong, or delay the purchase transaction. So we'll talk through how that's not often the case and how those misperceptions arise. Lastly, and perhaps most importantly, one of the biggest problems out there is the lack of productive and fruitful agent LO partnerships. We'll talk about the challenges we hear from real estate agents and how loan officers can step in and help. Our approach again will be to present the issue and acknowledge and understand it, then present the solutions. And these solutions are what we've heard from your peers, agents and loan officers around the country who have weighed in on these issues. So this stuff that we're bringing to you isn't made up. This is all curated from your peers. So with that, let us dive into the inventory issue first. So taking a look at inventory, we know that there's limited supply due to historically low inventory. This is real in just about every market across the country. This makes it very difficult still for buyers to compete. We know interest rates remain high, which can stifle demand despite enormous interest in homeownership, but we have seen these rates steadily declining. Demand, so many buyers are still competing for the same properties and have been for several years now. And of course, it's important when thinking about demand, not to mention the sideline buyer that is weighing their options before entering, right? Wading into the water based on the current financial environment. And of course, people who have purchased in the past few years who might be waiting to move out of a bigger home into a smaller home or vice versa. Prices that are steady or increasing, prices aren't going down anytime soon. And buyers, again, struggling to compete. So all of this in mind, all of this compounds to create a difficult situation, especially for new buyers who are trying to get approved, win their bids, and get into a home. So what can we do? It's important to consider alternatives to the open market. Referencing agency-owned or municipal-owned properties and land trusts combined with DPA can potentially be affordable options for first-time homebuyers. Many local housing agencies or municipalities around the country purchase and repair blighted homes and bring them back to market at or below cost, or are even developing new properties meant to be affordable. Let's think about homes that need minor repairs that may give buyers the opportunity to compete and to afford a home they can make their own. And we want to be clear, we're not talking about, like a huge hole in the roof, but the homes that don't get snatched up in the first week or two that perhaps maybe need a little bit of TLC, but can offer a handy or motivated buyer another outlet of inventory to choose from. Another alternative is to get to know agents that are listing affordable properties. Get on their email list to monitor their coming soon offerings. This helps you get out ahead of the competition and can help open new inventory opportunities for you as well. Another alternative is manufactured housing as an affordable homeownership option. It's also important to counsel buyers about what the process and competition will look like, right? Make sure they get pre-approved and probably take their home buyer education course much earlier in the process. It also helps to partner with a housing counselor to help incubate and prepare new buyers, right? This all helps build a bigger and stronger pipeline over time. Just as an example, one agent in Houston says to use what they call the calculated patience, meaning narrowing down the buyer's list of must-haves for their new home so that you're fully prepared to strike on a contract offer when the property hits the market, right? It's important to be realistic about these must-haves and discuss them candidly, all part of counseling a home buyer. So now let's talk about the confusion surrounding down payment requirements. According to a study by the Urban Institute in 2018, which still resonates today, 65% of prospective buyers still believe they need at least between 15 to 20% down for the home purchase, and 76% have little to no familiarity with low down payment programs. Home buyers aren't familiar with the terms or requirements. As an example, may have a misunderstanding of debt to income requirements, how student loans are calculated and taken into account. So they sideline themselves. They give up on home ownership. And then there's that nasty 20% myth that so many buyers, right? We're referencing the thing that we all know. So many buyers still think they have to have 20% down just to buy a home. In summary, it's important when looking at all of this that the marketing content and the activities um, are better educating aspiring buyers and letting them know that homeownership is within reach. And most importantly, how? How can I make this happen? So first, strongly combat the 20% myth. We have to aggressively debunk it, especially amongst first-time home buyers. This is not a requirement, and it's important for the marketing content to educate buyers accordingly on just what the requirements are based on the product, based on the program. It's important to get outside of our bubble. We hear from so many realtors that they got into DPA because one buyer came along who needed help. And then that led to a new path in their career, a new tool in their tool set, and a heartfelt desire to help. So it's important to align yourselves with other agents and lenders that are working in that DPA lane. Also, tell the stories of how you have helped others with down payment assistance. Phenomenal content for your social media audience. All right. Let tomorrow's buyers know what you were able to accomplish for yesterday's buyer. And perhaps after this call, right, today's buyer. Make use of the educational tools that are out there, such as downpaymentresource.com or training classes from your state or local housing finance agencies, homebuyer education classes. Take the time to know and offer the tools that are available to homebuyers. Everyone here on this call, all of us on our team have interacted with these providers who they themselves are very interested in meeting you, in providing you the information that you need to go out and to talk to prospective homebuyers. And of course, part of the education that I just mentioned is just being willing to talk about DPAs. And we'll talk more about agent and LO partnerships, but loan officers can help you gain comfort with DPA requirements and open a path to helping more homebuyers. And of course, if this is not for you, it's understandable. It's okay to remain in your lane if you feel uncomfortable diving into this. But it's important then that if it's something that you come across, that you refer those deals, or as mentioned, chat with someone who has worked these deals, right? It's important not to give up on these buyers. So, is it true that sellers don't like DPA contract offers? Is this something that has appeared in your market? Well, this is yet another myth that we see, another problem. We know one bad experience may sour someone's willingness to work with the DPA program again. Sometimes the seller or perhaps the listing agent representing them may misunderstand the DPA program or may associate one bad experience and then broadly paint all DPAs with that brush. And remember that sellers need help framing the value of DPA appropriately, right? This is where agents can step in, help them frame just what this DPA can help them accomplish. We also know that sellers and again, their agents, they want certainty and they fear any kind of delay with the purchase transaction. Understandable. And sometimes will associate a down payment assistance program with a lack of certainty and therefore a potential for a risk of delay. So what can we do? Realtors leverage the experience and expertise of your loan officer partners. They can help set expectations with even the seller and their agent. Leverage the value of a DPA. DPAs can be framed as, hey, I don't need to ask you for closing costs because I have my DPA in place. So you're going to be netting more from this transaction. That is a value add. Provide assurance the deal will get done and done in a timely manner. Now, that also means you need to know the guidelines and timelines for the program you're using for your client. And as long as we educate ourselves and our borrowers on what is needed up front, there is no need to fear delay. We also have to ensure that the consumer is on the same page as you. They should understand what is needed up front so that they are able to be invested in keeping their home purchase on track. We also keep hearing from realtors around the country, don't disclose more than you have to. Put in the contract what state law requires, but if you don't have to disclose the source of funds for the down payment assistance, then it's none of the seller's business. And remember, ask a loan officer who does a lot of DPA well, and they will tell you that a DPA buyer who is qualified is still a qualified buyer. Now, up next, we're going to look at the huge misperception of DPAs extending the transaction. Now, anything during the loan process can cause a delay, not just the down payment assistance program. Perhaps the loan officer didn't fully investigate cash to close up front, or it's possible the DPA was added later in the process. Sometimes when a DPA is added later, people forget about the home buyer education class that has to be completed for the majority of down payment assistance programs. And to that point, delays often stem generally from a lack of communication amongst all parties. So what can we do about this misconception? First, it's important to build our DPA IQ. Understand the programs you're working with. What is the application process? What are the timelines? Is home buyer education required, right? And if so, complete it early. The class is good for at least 1 year. Ensure all other services are ordered in a timely manner. We're referencing coordinating with title, the seller, the lender. It's often not the DPA that causes the problem, but the DPA gets blamed. Imagine that scenario where a buyer gets qualified, shops for a home, takes a while, but finally signs a contract. But what happens? Bank statements have expired. You need to update the bank statements, not enough cash to close. Then everyone says we need a down payment assistance program, but the transaction gets delayed. In that case, the DPA wasn't necessarily the problem. Insufficient cash to close was the problem. The DPA actually was the solution to that problem, but could have been detected or anticipated earlier. So agents work with loan officers who know the DPA well and can close on time. This last issue is one of the most important in our opinion. Let's start with this. The most common question we get from real estate agents is, how do I find a loan officer that can help with DPA? Specifically, loan officers that meet the following 3 criteria: that they offer DPAs to begin with, that they have an understanding and they're good at DPA, and that they want your DPA first-time homebuyer business. Problem is, many LOs aren't meeting this demand with the right message, that they do offer DPA and are good at it. So let's break this down. First, what can real estate agents do? Well, it's important to talk to current loan officers. Ask the broker, ask peers for loan officer referrals, ask program providers who their best loan officers are. Next, educate yourself on DPAs in your market, right? Attend a home buyer education course. Better yet, seek out the provider, get in contact with them. As mentioned, they are more than happy to discuss the program requirements with you. Create relationships with partners, loan officers, brokers that offer DPA programs. Talk with your housing finance agency about their own relationships with lenders, loan officers, or real estate agents. They know who is offering their programs. And in some cases, program providers have a specific list of loan officers that they work with. Easy. Do first-time homebuyer lunch and learns, right? Maybe some coffee hours. Leverage your social media. It's important in any which way to craft an intake strategy with realtor partners that are working with consumers in need of down payment assistance. And also court other agents as well that themselves list and sell affordable and DPA eligible properties. They may have great loan officer connections and also insights into some of that inventory that we referenced earlier. And loan officers, what can loan officers potentially do better? You can continue to grow, or if you haven't started, grow your DPA expertise. Work with your product development staff, work internally to get access to the programs you and your agent partners and your home buyer clients need, could benefit from. Host teaching and network activities, again, referencing lunch and learns with local agents and brokerages about these down payment assistance programs. Get boots on the ground in your community, right? Get active with local unions, employers, faith-based organizations, and so many other organizations. Leverage your social media and be online when your agents are working. And certainly make sure you have an intake strategy for those new DPA buyers and your new agent partners. And most importantly, if you're doing all of this, broadcast all of this to your agents or just to agents in general. They need to know that you are the local DPA expert that is here and ready to help. So to recap, let's make sure that we explore the creative inventory alternatives that might be available to us and our potential buyers. Now, we don't need 20% down to purchase a home. Leverage the value that DPA can bring to the purchase transaction, right? The value from the buyer to the seller, everyone involved. Set these expectations with your buyers and prepare them early on. And lastly, create an effective and innovative agent loan officer partnership. Now, remember, we said at the beginning we'd give you millions of reasons to reconsider your objections and perhaps apprehensions about DPA. Well, here you go. Did you know that 33% of all declined loans are salvageable with DPA? That includes loans declined for cash to close, but also for qualifying ratio issues. Now, DPA cannot solve credit or employment or property issues, but tons of declined loans could be saved if a DPA were identified to help with cash to close or debt to income ratios. And when a DPA is applied to those declined loans, we find an average of about 6% reduction in loan to value. Additionally, we did some research a couple years ago and found that about 68 million single family homes in the US qualify for down payment assistance. This was 87% of all available homes on the market. That is a lot of inventory. And lastly, through more recent research, we found that about 32 million renters are mortgage ready, but many don't think they qualify. And believe it or not, it's because of the 20% down myth, or it's because they believe that a student loan will kill the deal. They don't know about low down payment options, or perhaps some other misperceptions, and thus sidelining themselves and giving up. We like to say that DPA customers become customers for life. So we encourage you to tell their story, help them, and they will refer their family members and their friends. In closing, please feel free to reach out to us with any questions. We are here to help you and your clients find the assistance they need. We can be reached at info@downpaymentresource.com. We will be sticking around a few minutes for some additional questions, but from the team and I, thank you. We appreciate you joining us here today. So kicking it back out to the team, what are we seeing? What are some questions that we can answer?
Yeah. Hey, Will, this is Mel. I was just going to say the question we always get is whether or not the session is going to be recorded, and if everybody will receive a copy. So just wanted to address that yes, the session has been recorded, and we'll get that recording out. Everybody should expect that in their inbox probably sometime tomorrow. And I will include the slides with that as well, along with some other helpful information that may help to answer some of the other questions that we've had. So just wanted to address that really quick. Not sure if anybody else has seen any other themes.
Hey, Will, this is Tracy. I did want to answer, there have been a little flurry of questions in chat about new construction. And I want to clarify, there are several down payment assistance programs that can be used for newly built properties. The nuance there is that you can't use down payment assistance to purchase the land. So it's at a certain point in time in the process that the buyer can apply for the down payment assistance because it has to it has to have a building on it. It can't just be property that it's being purchased towards. I don't know if you want to dive into that a little bit deeper, Will, since you're more familiar with all of that, but I wanted to address that because that keeps going back and forth in there.
Sure. Yes, thank you. I'll hit on a question at the top here regarding costs to a buyer or appraisal. With respect to the DPA program, they will outline if there are any fees required um, on behalf of the buyer, or if funds themselves, a portion of them may be used to cover certain fees, such as recording fees, anything at the end of the transaction. And of course, whether they cover other fees that may be incurred by the buyer throughout the entire process. So the providers are very straightforward in terms of what is required of the home buyer, what they will cover, and obviously part of what we discussed, the homeownership program index, is tracking trends that we see. So if we see, for some reason, as an example, an uptick of fees being charged to the buyer, that might be something that we cover, but that is not something that we are seeing at the moment. What we are seeing is that the pool of how funds can be used is actually expanding, just due in part to current climate. But thank you for that question.
Hey, well, this is Tracy again.
Yeah.
I have another quick thing that I want to touch on. In chat, we have somebody asking about where they can find a list of the DPA lenders that they can reach out to. So this is a common question that we get every time we do webinars, is how do you as agents find lenders that you can partner up with that will utilize down payment assistance programs so that you can refer your clients to them and make sure they're getting taken care of. So there are a few options on how you can do this. One of which is if you or your home buyer does a search for down payment assistance programs on our website, or if you have Down Payment Connect and they're using your link, when those results are sent by email, there will be a link in that email for each of those programs. If you click on that link, you're going to go to a page that's going to give you a whole bunch of information about that specific program. And one of those details is going to be a list of approved lenders. You can click on that and you're going to go straight to the program provider's site where they have a list of lenders that have already been vetted and approved to work with that specific program. That's not our list. That is the down payment assistance providers list. So you can look at that to see. You can also join our Facebook page, our down payment insiders page, and you can put a post out there and you can try to find lenders in your area that you can partner up with. We get a lot of traffic that way, and we see a lot of people getting really great networking going on there with other professionals in your area that you guys can kind of team up with. So I wanted to make sure to point out this couple of different ways for everybody in case that helps you.
Thank you, Tracy. Thank you very much for that. Yes, leveraging, we have resources really for home buyers and for professionals on our website, whether it's blogs, whether it's webinars like the one that we hosted today. We mentioned DPA 101. We have all of that listed there, a wonderful resource. We certainly appreciate that. Is the Facebook page, I just saw a question come in, is that in the chat? Are we able to add that?
Yes, Mel already added it. It's in chat.
Awesome.
She put it up just a minute ago.
Okay.
Hey, Will, it's Mel again.
Yeah.
I've seen a couple of questions. Elizabeth has asked, and maybe you want to address this one too, since like Tracy said, you're a little bit more familiar with the programs, but basically she's interested in what's the max that these programs offer in terms of percent to help the buyers. So if you want to just review kind of, percentage, how they work as far as like the percentages or the caps, et cetera, for the assistance.
Right. So that will vary from the experience I have, Keith, as well, based on the funding source, really. So depending on the funding source, that will stipulate just how much of The money can be used either towards, let's say, the purchase price, as an example. CDBG, I believe, is 50% of the down payment with home. That may not be the case. So it really does vary based on the funding source, just how much of a percentage is provided to the home buyer. And on top of that, there's always the caveat that it is based on need. So they will certainly do their calculations, and part of it is to help as many home buyers as possible with the funds that they've been allocated through their funding source. But that is a great question. We're always looking at that information, what exactly is the percentage that can be used towards the purchase transaction, and it will vary based on funding source, I will say. Thank you, Mel.
Yeah, no problem. And I'll just add too, a lot of questions that I've seen today too have been kind of program specific. And we have a couple of other sessions that I think Will already mentioned that we do. We have rotating monthly webinars. And guys, we have a great one called DPA 101 that I know Will mentioned at the top of this session that goes through kind of just some basic DPA knowledge. And then we also have another one about how to grow your first-time homebuyer business, or really just how to grow your business in general, using down payment assistance. So I actually posted a link to our education page in chat, but I'm going to do it again because it's gotten lost. We've had a lot more requests coming in, but I just wanted to address that because I see a lot of really specific programs about, really specific questions about programs, and we do dive into that in a different session if you guys are interested in attending. And I will also include links to those webinars, registration links in the follow-up email for you guys. And also we have a YouTube channel that has some recorded sessions that I'll include as well. So sorry, Will, I just wanted to mention that. There's definitely more information out there in case we don't get to answer all these questions today.
Right. No, I appreciate that. And I think with that, I don't see anything else in the Q&A. So in closing, please feel free to reach out to us at our inbox. Of course, use our website as a resource. We are glad that you were able to join us here today. Hopefully debunking some of these myths will be helpful just in conversation or just in perception. If you haven't engaged with any down payment assistance programs. But we look forward to continuing to serve you and helping you here with all of this information. So again, thank you for joining us, and we hope you have a great rest of your day.